Hello everyone, welcome back. In today's video, I am going to speak about how the market is going to perform in 2024, or at least how I believe it's going to perform in 2024. And then at the end, I am going to do a net worth recap and just do an update on my net worth. So I'm going to speak about probably the more important thing that you all want to know, and that is how the market is going to perform in 2024. So before we get into how it performed in 2024, let's just do a recap on how it performed in 2023. And for the past year, for 2023, the S&P 500 has had a knockout year, about 25% over the past 1 year, which was from January 3rd, 2023 to current. And we see similar incredible gains with the NASDAQ. This is pretty much like what all the people invest in that want growth. It is up around 45% for 2023. So it kind of gives the indication that 2023 was an extremely good year for equities, and it is going to be hard to replicate another year. And I think the interesting thing is that other than the past 2 months or so, the market gains have been pretty much in line with historical performance, around 7%. Up until the beginning of November or the end of October, it was up around 8%, which is pretty average for market gains, all things said. And of course, for the past 2 months approximately, the gains have been amazing, with most of these gains happening in the past 2 months. We're up about 16% since the end of October to the start of 2024. The gains have been approximately twice as much in the past 2 months than the entire round 9 months prior. So incredible performance overall. And I think it's undeniable that most of the growth has been very concentrated in just a select few stocks. So if we scroll down, we're going to look at the gains of the Magnificent 7 stocks and how they compared to the S&P 500 over the past year. So all of these stocks here to the left, Apple all the way down to Tesla, have outperformed the S&P 500 very significantly, with the S&P 500 again up 24% just about, and the lowest Magnificent 7 stock, Apple, up almost twice that amount at 48.2%. So most of the growth has come from these stocks, and that is probably why we see the S&P 500 up so much. These big market cap stocks, their gains have just been incredible, which is definitely lifting the tide for the S&P 500. So here we have a Yahoo Finance article that kind of goes over the topic that the Magnificent 7 have driven much of the S&P 500 gains this year. Kind of the opening sentence is just it's well documented that the Magnificent 7 stocks have driven much of the S&P 500 gains this year. And this article, this author wrote this article in October of 2023. So since then, that has just been further exacerbated. And this person goes on to say that the remainder of the 493 companies were much weaker overall. So the equal weight value of the S&P 500 was actually down slightly. And I think, again, that just goes to show that without these 7 stocks, the market would basically be flat. And I think that's kind of undeniable when you compare it to other assets. So instead of an S&P 500 ETF, a common dividend ETF is the Schwab US Dividend Equity ETF, or SCHD. And that has basically been flat over the past year. And that's mostly because the SCHD does not hold any of those high-flying stocks that was included in that list prior. This is a dividend ETF that focuses on a combination of yield and growth, and you'll see none of those Magnificent 7 stocks in the top 10 holdings of this ETF. And in fact, I don't believe that you'll see any of those stocks throughout this ETF at all, and that is going to be partially why this ETF has basically fell flat over the past year. So how is the market going to perform in 2024? We're finally going to get into that, and I think that it's important to note that the Fed is expected to cut interest rates quite a bit by the end of Q4 in 2024, and that is going to influence equity prices. Now, here is the important thing with that in mind. I think that investors are pretty much too hyped up over that, and they think it is going to be a driving force in 2024. But the problem is people already know that the Fed is going to cut rates, or that it's very likely to cut rates in 2024. This has been in the news for the past couple of months. There were many news articles written about this. I just showed you one with the interest rates being lower. And people have pretty much known since the beginning of November that rates were going to be cut in 2024, and that caused this significant bump toward the end of the year where we saw that 16% gain at the end of the year. Now, with that pretty much all priced in, I think the market is going to look at two things. Is the Fed going to decrease rates more than what people believe that they're going to decrease rates by? So I think that this article is saying here that it's going to be under 3 or near 3 by Q4 of 2024. But it might not be that low, because the central bank's own projections say that there's going to be a 75 basis point cut by the end of next year, which will lower the funds rate to about 4.5 to 4.75%. And I think that's what investors are pricing in. I don't think that they're pricing in a 3% decrease to that 3% level in 2024, because that would make the market go up probably a bit more than what we've seen over the past 2 months. But I do think that if we see what's expected, then we are going to pretty much be in a circumstance which this article describes at the end. And the author of this says that we are going to end up with a relatively soggy 2024 when we look back at the end of next year. So what does that mean? I don't believe that overall the S&P 500, especially the Magnificent 7 stocks, are going to be the driving growers of the index or of the market. I think that the S&P 500 is going to probably go up, although not significantly so. It is going to be relatively stagnant, I believe, with an increase of probably under 10%, and it might even go maybe a percentage to negative. I think that over the past couple months, we've just seen all of that expected growth and all of that expectation of the Fed cutting rates get too hot. So I don't think that the market is going to continue that performance of going up another 25%. So I think what most people, or maybe not most people, but some people like me that have that belief that the market is probably not going to perform extremely well, believe that it's probably about time that the rest of the S&P 500 sees some attention and appreciation. We had a year where basically 7 or so stocks did extremely well while the others lagged behind. So the author of this article says that others on Wall Street agree that eventually the other 493 soldiers, that they call them, and the S&P 500 will be what leads the market higher as the cycle trade takes over. So me personally, I do agree with that. I think if the market trades up, it's not going to be because of those 7 stocks that we spoke about. It's going to be because of these stocks like that are included in the ETF SCHD or VIG, or more conservative investments, maybe not so growth orientated. But I think 2023, none of those stocks were really appreciated. So I think 2024 is going to be the year for those dividend stocks and the other stocks that aren't really those tech stocks that are going to finally see some appreciation. So in closing for the first part, the market probably isn't going to do poorly in 2024. Again, I can't predict that. I don't know if there's going to be a war on the horizon or something else that is like a black swan event that you just can't really predict. But I think all the economic forecasts, given what it is currently, I think the S&P 500 will either go up slightly or down slightly. I don't think we're going to see a all-star year like we did in 2023, and I do think that if it does go up, a lot of that growth is going to be in the stocks that were underappreciated in 2003 and in 2023, stocks like that are in SCHD and other dividend ETFs. So that's going to pretty much conclude part one. So now I'm going to get into my net worth update. And this is going to be relatively quick. I'm not going to go over this in too much detail. I'm just going to highlight pretty much how my net worth increased. The last video I did was, I think, in November of 2023. So about a month and a half ago, and my net worth was at about $130,000. And because of the market performance, my net worth grew quite significantly, and it was up about $7,900 month over month. And we're going to again see how that moves along. And so if we just look at where the majority of those gains come from, I did contribute a decent amount to my Ally account, about $2,000, just to pad up my savings there a bit. And I'm not going to contribute so heavily going forward. I think my emergency fund is where it needs to be for now, so I'm going to contribute kind of like minor amounts going forward, or maybe like $35, $40, $50 per paycheck. We're going to see how that goes, and the most of my money is going to go into my investments. And that is where the majority of my gains have come from, about $3,000 or so in my M1 Finance growth, and in my M1 Finance passive about $2,000. So we see $5,000 there. And my Chase account did grow a little bit. That's really not so important because I don't really use that to really hold much. I just keep basic savings in there in case I need a few $100s and I gotta go run to the ATM and get it. Nothing crazy there. And then we see my 401k, of course, did grow / IRA because of the market performance, and the other assets pretty much grew in line. The car always decreases because it's a depreciating asset, and pretty much like a nominal growth in my HSA there, but that's just a health savings account, so that's really not for investing. Overall, it's just a small amount. So I think that it just goes to show majority of the performance was definitely in my equities, and my net worth would not have grown so much if I was not invested in equities. So I think that just goes to show you the power of compounding with that growth. So that's going to be it for today's video, everyone. I want to thank you all for watching. I definitely appreciate it. If you did enjoy this content, definitely leave this video a like. And don't forget to subscribe if you want to see future content from this channel. I do updates as frequently as I can. I try to basically track my net worth and just talk about various investments and the state of the economy or stocks in general. So definitely consider, if you like things like that, to subscribe, and I will see you all in the next video.